All right. What's up, guys? How you guys doing today? Just wait for some people to jump in, and we're good to go. And let's see. Got one peep in Twitter. Here we go. We got some people jumping in. How you guys doing? Bitcoin hit our point of interest over the weekend. Did around like 8 or 9 p.m. Congrats on the W this weekend. Yeah, trading over the weekend. It was a long trade. It took a while. Of course, as soon as it hit our target, that's when things started to wake up. Yeah, we got the W. I'm going to go over that trade too for anyone who missed out on the trade. Like why we jumped in, all that fun stuff. What's up, Caliber? How you doing, man? Dot for spot buy when able. Yeah, we could do that too. All right, cool. Let's go over it. So yeah, we're going to go over our trade over the weekend, why we jumped in, the confluences we looked for, all that fun stuff. And then we'll go over the current price action for Bitcoin because things have evolved a little bit. All right, cool. So, oh yeah, a good point there, Noah. There's a promotion going on for TradingView too. I could talk about that as well. But yeah, okay, here we go. So we were going range bound in this valley area since we pretty much got into the supply concern. If we zoom back out a bit, right? We were looking at this hourly supply concern. We knew it would likely slow down around this area, just like we were talking about this area yesterday. When price action got back up to it, we would assume that we'll get our head hit off of it or go range bound for a bit as well. But yeah, we mitigate the supply concern, so we can actually like delete that, and it helped generate this valley area that we were in as people were selling from this recent area of interest. And in combination with that, we had liquidity resting up here from this high. So lots of reasoning for people to prepare an exit plan after we had this crazy pump from the 50-day EMA. And now we started going range bound. I started a couple of shorts. You guys know I made either peanuts or lost those trades. There's 2 separate trades here. But yeah, then we found the opportunity to trade the same range, but we went long this time. Kind of learned from our mistakes. But yeah, so we're here. Let's zoom in on like the 5-minute structure. I believe that was the time frame. I'll look at the signal here. So it was based on a 5-minute candle close above the VWAP. That was our entry condition that it would induce a change of character simultaneously. So I just described it as this because I wanted to make sure that people waited for the VWAP for us to break past the VWAP. That's the main thing I wanted people to watch, because I may say wait for a candle close above a certain price, but sometimes that price is slightly different on different exchanges. So I use that to help communicate the signal a bit. And we had our stop loss suggestion based on the low and our target of 107,667, right? And this is what it looked like at the time. And we just wanted to have that candle close, and we were targeting the valley area high. When we got the break right here, this was basically the entry. We pulled back. It's completely normal. And we had this as our stop loss guard. The structure, the confluences that we had were the break of the downtrending momentum. We want to make sure that the pace of the sellers have slowed down and that the buyers were taking over. And then we got the break of our neckline for the double bottom, and simultaneously got acceptance into the valley area and simultaneously broke above the VWAP. It's not fun to have something immediately go against you like that, but it's normal, especially when you're coming to retest the valley area or a previous high. And then things slowed down dramatically after we had the bounce off the valley area. There was an exit warning here where I closed 50%. We lost the uptrending momentum, right? The same reason why we were preparing for the long. we lost the uptrending momentum rather than the downtrending momentum, and we got the opposing change of character, warning you that things could start going against you. And I think a lot of people were discouraged when we lost the point of control and the VWAP simultaneously like that. But we ended up staying range bound off the point of control and then end up hitting our target. Then we came out of the value area, had a nice head and shoulders. Congrats. I know some people took that setup, so congrats on anyone who took that. I didn't signal this, but awesome scenario. When you have a head and shoulders pattern or a double top or a change of character, right, at your value area high, especially when you deviate away like this, you could start entering a short. And your goal is to hopefully target the value area low, but you have to watch the point of control as your primary barrier as well as the value area high. So if we had like a opposing change of character here and broke this momentum, that would have warned you to get out of your trade because it could have went against you immediately there. But yeah, we got that double bottom off the point of control. We even got the internal change of character right here off of this high. We broke that low. And then we came up from there and then hit our point of interest that we were talking about during the last live we had. We had this downtrending point of interest from the all-time high, right? Where we had, this touch point to here, right? We were able to draw a trend line because of those two touch points, but you don't trust it until price action reacts off of it. You don't just ape into a short when you touch a point of interest, especially when it's a trend line that's descending or uptrending, right? We had a lot of sell orders here and a lot of liquidity that starts here, even like way more liquidity up here, but it all started inside of this supply concern. And then we double topped off of that supply concern while simultaneously hitting the downtrending point of interest. And that's what started our little downtrend that we've got going on right now. But we just lost the downtrending momentum after we had a strong bounce off of the previous value area low, right? We had a really aggressive bounce off that level. And now we are breaking the downtrending momentum after retesting the point of control. But now that point of control level is an area of confluence for a double top. It's a descending double top after the hit of the VWAP. You might have received a higher high over here on a different exchange, but on Bybit, which is an exchange I extremely trust, especially for like the lower time frame price action, we got a lower high. So we could have a descending double top neckline break here, which would give us the measurable base target of the value area low. When you grab your trend line from the neckline to the resistance, click and drag to here, this is basically telling us that if the momentum of this structure were to be maintained, that this is where we're going to be headed. And now I'd go as far as targeting the least extreme low where the liquidity is resting after this aggressive bounce. But in my opinion, this is not tradable. I wouldn't trade unless you have rules that allow it, of course. Based on my rules, I don't like trading inside of the valley area as much unless it's at the extreme lows or the extreme highs of the valley area. So just be cautious. The R&R from here to here isn't great unless you have like super low time frame pullbacks to generate a stop loss guard to give you that target with proper risk to reward ratio. Well, yeah, that's Bitcoin. So right now, after we tap this area of interest, our reasoning to drop further has increased for sure. I've got a feeling that we could come up and grab this liquidity first, but we got to treat this like a descending point of interest that could have just induced the start of a more macro or more longer term downtrend back down to the valley area low here of this previous valley area low from this demand zone. This whole area, like up here on the hourly, could be pulled as its own valley area, like macro wise, like from like here to here. And this will show you like the more critical volume shelves along the way down, right? Like right here. This is going to be a strong level along the way down. If we lose our local valley area, we could start targeting at least this volume shelf. And we can see that we have a lot of interest here. It's just, you're going to have to watch. Basically, the number is like around 106K is going to be a point of interest. But if we get acceptance back inside this strong area of interest, you could expect a potential rotation back down to the opposite side of that area of interest while being mindful of the macro point of control along the way. But yeah, that is Bitcoin. So I'm expecting a rotation back down to like around 100 and some K while watching the 50 EMA and some of the key levels like 106K along the way down. We got a decent demand zone here alongside that 106K level. So we can expect this to potentially induce us to go range bound here as well. Just like you would with the smaller range. You look for the supply or the demand, right? Impulse move, base, impulse move, get the change of character, assume this as the potential high of the range, where we go range bound. Same thing here, impulse move up, base, another impulse move up, change of character, assume this as the low as the potential range, where we go range bound. So the same kind of scenario could happen here, right? And this being the key level that broke, that potentially could induce that move down. But we have to lose this value area first. Otherwise, we should assume that we'll stay range bound, or we could even potentially go up from here, right? But right now, our target is the local value area low, around 106.7. Any questions about that, guys? And we can move on to other assets. Coma cooked that one all the way with you, Kyle. Nice. Good job. Yeah, some people held a little longer. Congrats on that. I had a limit exit because I was sleeping. So if I were awake at the time, I would have lifted the limit order to let it kind of breathe and see how it would react to our key level. But yeah, it was like, I think it was like around like 4 a.m. when it actually like completed the setup. So I was asleep. Hello, all you awesome people. What's up? Blackwater, how you doing, man? Nice seeing you again. Noah, you closed this trade on Saturday, but you're a Canadian. Learn from me. No potential upside closing early. I got you, man. Yeah, I closed a little bit early too, so it hurt my net R&R on the setup. Wasn't too bad of a hit though. Your goal is to try your best to stick to your plan, but when you have those like opposing confluences telling you to get out, it's sometimes tough to hold. So always have a good exit plan. Just like you have your entry plan for your rules, when you want to plan to get in a trade, you should try to build rules for knowing when to exit the trade. And sometimes just having the opposite effect, like for example, when you're looking at a value area low and change of character, breaking past the VWAP, like if those were all your rules for entry and you had like opposite rules for shorts, sometimes like listening to those opposite rules for an exit doesn't always get you the best R&R, but it, yeah, it's good to have an exit plan. All right. So yeah, so basically what we're waiting for is that break below the point of control, lost this neckline, and then we'll be coming back down here. And from here, I'll be preparing for potential longs for a quick scalp inside the internal range. But if we don't get the proper confluence to enter that trade, like a break of downtrending momentum, change of character, VWAP on our side, right? We shouldn't take the trade and assume that it can go lower, right? We do have a potential wick level down here for an SFP if we deviated below this value area to help us front run a potential return back to the value area, but then we'd have to watch any local barriers as well as the value area low along the way. In case the value area acts as resistance and then starts bringing us down to those lower levels, like back down here. And we know there's a lot of liquidity here, just from the behavior of this regression trend, stacking a bunch of liquidity. And when you look at the heat maps at the 50-day EMA, roughly around here, 104,000, there's a lot of liquidity here from this low here in the form of liquidations. So people will get liquidated here, and those liquidation orders could help bigger traders get in on their positions with the least amount of slippage, well, lower amount of slippage. You have a hard time sticking to the plan. I got you, but you gotta try to gamify your trades. Say give yourself your rules, write them out in a checklist, and know that you don't have to take every setup, right? And when all those rules are set up, that's when you take action. And the more consistent you are with that, the more you're going to be able to grow in this space. And to kind of help show how that consistency can help you grow, I'm starting a challenge next week on the 7th. We're going to be growing a $1,000 account to $1 million. And it's going to take a while. And I want you guys to realize growing to 1 million from $1,000 account is not easy. You are essentially 10xing an account 3 times. And we're going to be trying to 10x it. Our first goal, we try to 10x it, bring it to $10,000. And then we're going to change our trading behavior there. And then when we get to $100,000, we're going to be changing our investing behavior because we're not going to be trading with all those funds. We're going to let it grow in a diversified way. And it's going to take probably a couple of years. And I want to document the entire process so you guys can follow along. And we're going to just trade with the same rules over and over and over again. And the same risk management. We're always going to be risking to lose 1%. And that consistency will get us to 1 million, but it's going to take some time. It's going to take a while to get there. Ian, that's a great question. I'm doing compound risk management. I plan on doing compound risk management for the sake of time. So when we do our trade plan each day, I'm going to be telling you the dollar figure that I'm going to be risking to lose. And at first, it's going to be $10. And then when we get our next trade, it'll probably be $10.10, right? And we're just going to slowly do compound risk management along the way up. That's because if we did it with milestone risk management, which is the way I do it personally, where I do a fixed amount until a certain goal, it will take us longer to get to the objective. And as much as I would love for people to do fixed risk management, it's more so for when you're already made it, in my opinion. You've already got there, you already got to your primary objective to do this as your primary source of income, like a day job. When you have a $100,000 account, I normally recommend fixed risk management, or a 15 grand account. If that's what you want to keep it at, then fixed risk management is good there. But this time we're going to be doing compound risk management just so that we can scale a little bit faster. But yeah, so on the 7th, we'll be starting that challenge. And it's not all going to be on YouTube. A majority of it's going to be inside the community. Because when I go live on YouTube, I'm going to give you guys a schedule of when I'm going to be going live on YouTube that we're going to stick to and be consistent with. And I'll be working around the community calls so I don't overlap any of those community calls, so you don't miss out on anything for them. But yeah, if you guys beat me to 1 million, then awesome. But it normally means you're breaking the risk management, or you start with more funds, right? If you start with more funds, that's different. But I don't want you guys beat me there too quickly, because that would mean that you're doing something wrong with your risk management. You're risking to lose too much. And luckily, during those scenarios, you've won during those trades. But yeah, I don't want you to race through this. Because I'm not going to be racing through this. I'm going to be doing this the same process as I would with my normal accounts. Risking to lose 1% every time. Unless there's a scenario where it tells us that we should be risking to lose 0.5% in the trade. The majority of our trades are going to be 1% risk. Okay, so let's go through some TA requests. First, I want to talk about what Noah just said. TradingView having an 80% off July 4th sale. That might only be local to US traders. So turn on your VPNs to sync to US if you're not in the US, or turn off your VPNs if you don't see your promotional offer if you want to save. I don't think I have a referral link in the description, but if you guys need one, you can reach out to me. The referral link I've got gives you like a fixed amount off, like $15 off. And I'm not sure if that will stack with the discount. Okay, so DOT was the first request from Noah. So let's take a look at DOT together and see if there's any opportunities there or if anything we could prepare for. Let's see, I got a DOT chart. Last time we looked at it was on the 26th, so about 4 days ago. How were we looking at it before? We were looking at this valley area here. We were looking at this downtrending momentum. We had a double bottom structure during our last live, it looks like. Yep. We broke that double bottom posture. We hit our main area of concern and the measurable target, which is downtrending momentum alongside with the momentum-based target. Not very safe trade there, but some people might have taken it. Let's just delete that. We broke that. We kind of fully mitigated this demand. So we're coming back down to this. We can't treat it the same way. What an awkward little price action it's got though, eh? Like that's regression trend here. Very consistent. Ascending channel. Until we broke it to the upside, grabbed the liquidity from up here. Right, and then we started to come down. After that liquidity was used as exit liquidity to help induce this drawdown. And now we're back at like this valley area low right here. After recently hitting our head off the valley area high here. Let's go to the just zoom out a little bit. See what kind of posture this is. We got it's very double toppy vibes. Ascending resistance. We got a ascending point of interest here. So we could be building a potential ascending pennant here. So we draw our undercuts. We got lots of undercuts here. Okay, and we got our liquidity grabs up here. And what we want to see, we have this more macro downtrending momentum here. So there's confluences here telling us that we could crawl our way up to this uptrending or downtrending point of interest, right? Where this momentum is. And that is a kind of a bearish posture where we're inducing more liquidity below us, but keep taking from above us. So it could start another rejection in this area of interest here. So I would actually go as far as like drawing like a little triangle. I would say like this. Just to repair for like bearish confluences mentally. Around this area. We got the liquidity up here. We just recently take this here. We just added some here. So we have the liquidity, a macro point of interest here, and downtrending momentum, and we're in a bearish postured structure. So just prepare for any opposing changes of character here that could induce a drop to even break this momentum and bring us down lower. And that's DOT. Looking more internally, like we could pull this fixed range volume profile from this demand zone here that we just mitigated, right? So we're going to include that in our pull because it was mitigated. And we're going to click and drag to our current price action. So we can look at the more evolved valley area. And right now we're dancing at the point of control and losing, we're using this area of interest that could induce a push back up, and that would work well in confluence with Bitcoin retesting its valley area low to maybe give us a more confirmed break of this momentum. So maybe you'll see DOT maintain this regression trend to the upside. If we don't, I could be wrong on this whole posture, this whole structure. This is a key level here. If broken, we'd be having that aggressive drop early, and we just take it as a more of a double top measurable based target rather than the flag. This is the primary key area of interest that I've got for you. This is more of a short. If we draw the pathing that I would see a potential bounce here, and then we prepare for the reversal here. But right now, internally, I've got nothing safe for you, man. That's how I'd mentally prepare for the structure that we've got for DOT. I hope that helps you out, man. And you got access to this link inside the community. Go back to, I'll save. Oh, we saved it. Come on, we saved it, bro. Save. There we go. Now we can delete. So that's DOT. What else we got? Hey, Alex, how you doing, man? Can I get a hey? How you doing, man? How's your trade been going? Yay or nay? Have you guys been in? I've noticed that the community has been crushing it this past week. It's gotten a lot better. I know, like a week before that, I saw some people getting hit pretty hard with the market structure being awkward. I was one of them. Like a large amount of people. I know, like a massive majority of people were struggling through this. But now it seems like the pictures that are being painted are a lot more transparent and clear. So the trading has gotten a lot easier. You're doing good. 2 for 2. Nice. Good job, man. And you risk to lose like 400, I believe. So you got pretty good P&L. Okay. Let's see if I missed any requests here. So we got, we went through DOT. We got a request for, statistically speaking, one of your next trades is really going to kill it. Yeah, it's true, eh? That's one thing that makes me a little bit more bullish whenever, like, when you know your statistical outcome for your trading strategy, when you lose like a couple times in a row, you start to feel like, yeah, the next one's got to be good. Yeah. But if you don't have that statistical knowledge of like your setups, then it's really tough to feel that confident from your losses. Most people feel like dread or get frustrated whenever they lose their trades. And it sucks losing trades. But if you know your statistical outcome is, let's say it's 60%, and you lose like 2 or 3 trades in a row, then you'll know like, okay, my statistical outcome tells me that my next trade should be a winner. And that can sometimes helps you with the emotions. But yeah, we got the break of the neckline here, guys, with that double bottom. We lost the point of control. We got an order block on our back. We could come up to retest, mitigate that order block as well as the point of control, since the point of control is basically a big magnet. And then from there, if the retest gives us a lower low, then we'll be coming down to the valley area low right after. And around here, we'll be preparing for longs. Got some SFP confluence here. If we don't make it down there, then we'll just wait for the opposing change of character and start targeting the valley area high again. Polygon request from Oscar. Let's take a peek, man. It's not Polygon. It's POL, right? Yeah. Trying to get used to that. Polygon waking up a bit. Oh, wow. Okay. So I guess we were talking about shorts last time with Polygon. We hit this supply concern here, right? Right after breaking momentum. So rude. We hit that supply concern, and then we got our key level here. It doesn't look like our key level changed at all since we last did our live. Then when we broke it, we hit our heads off of the valley area low. We just draw that up for you. Right? This is our valley area low. We just hit our heads off of this, and then we started fully mitigating this demand zone and came down from there. So congrats to anyone who took that setup. And we came back up after that deviation, got a parabolic curve. These are a pain in the butt to draw, but I'll just draw it out for you. Under the paintbrush section, there's a curve line here that helps you draw parabolic curves. There's 3 anchors, so it's really subjective to how you draw it. It could evolve and change pretty easily. I've only ever traded like a handful of parabolic curve breaks, because they normally give you like really aggressive drops. It's when you basically see like normal like breaks of structure using its previous highs as support like this, but the momentum of the buyers keeps speeding up faster and faster and faster. So you get this like curve effect like this, and they're called parabolic curves. On the daily time frame, these are insane. On the 15-minute, it's blah, but they normally will give you a good key level to prepare for a short, and we start to grab all the liquidity along the way down. Similar to how you would trade a break of a regression trend if we broke a regression trend like this, or have all those bounces off the lows, and the highs are constantly taking liquidity, right? Stacking, stacking, stacking below. So the shorts are really, they usually play out to their target really well. Same kind of thing with the parabolic curve, but you really got to ignore the trend line as much as you can when it comes to like, you don't take action on the trend line break, you take action on the change of character. And like right now on the 15-minute posture, like that's not until way down here. So we need to be patient to hopefully get a higher level. If we retest this, grab the local liquidity, maybe with an SFP on Polygon. If we get that swing failure pattern, that's a good front run to a potential change of character. And then you should shortly see afterwards the break of the parabolic curve, which is not the most important part unless you have a huge deviation away from it. But yeah, right now we're kind of hopeful for the scenario where we get that SFP liquidity grab, so you can take that trade down to target the change of character and then start going down from there. Since we know that there's supply, we had this key area of interest here. We should watch that as well for potential support along the way down in case we get a bounce. I wouldn't evolve my stop loss too soon, basically, just because of the fact that we have this previous valley area, this key area of interest, which basically helped induce this continuation here when we got a bounce off the point of control. A sec here. Let me draw this out a little bit better. There we go. So basically what I'm trying to say is, if you jump in on the short, you have to watch this as a barrier concern along the way that could induce a bounce and maybe even paint the picture of a like potential head and shoulders, right? So don't evolve your stop loss too soon unless if you're planning this as your exit plan, that's different. But if you're trying to hold this for a potential move down, wait for the potential bounce before moving your stop loss, or else you can get stopped out too soon. But yeah, this would be our key level to watch for an SFP. Mark your wick right here. So you can see that cross past the area of interest. And if it closes back inside the range, then you got yourself a short. But you'll be targeting the local barriers first. If we break past that, then you have your continuation. So this would be your alarm right here if you don't want to stare at your screen, to tell you to look at your screen to prepare for the SFP. Okay, so I think that's everything for Polygon. If we zoom out a little bit, we can see that it's a little bit, the bullish structure is kind of defining like a double bottom, ascending double bottom. These parabolic curves are always fun to like show off and prepare for a potential like strong move down. I'm not a big fan of Matic after all their branding changes and they're losing their macro key levels. If we manage to get the strong continuation, then 20 cents is your big key area of interest that you got to watch out for potential resistance from this more macro value area low here. But acceptance into this with a break of structure can help induce a continuation to the value area high while being very mindful of this point of control, because this is a very strong point of control based on this volume node. You're going to watch out for it. But yeah, that's Polygon. When the time comes, you can reach out to me if you want to try taking that setup. I'm going to set an alarm for it, actually, because that seems like a good short. There we go. Alarm set for the crossing of that level here. Some say Kyle's grandpa was Picasso. He was good at counting cards and stuff like that. I have a newbie question. How do I close my short position with a limit order instead of a market order? A market order fee is so high compared to limit order. When I set a take profit doesn't give another option. Maria, what exchange are you using? Each exchange has like a sometimes unique way of closing your trades. On see, Blowfin. On Blowfin, it's when you're in an active position, there's an option below where it will show you basically if you want to execute a market or a limit for your take profit plan. You got to, I'd recommend making sure you're set to GTC mode, because what will happen if you're on post only is good if you're trying to force an exit as a limit order. But the downside is you're in a queue, and sometimes if your limit order was hit, let's say it's this value area low, if your limit order exit was like hit here, and then it starts going against you, it might not have closed your full position when you're set to post only. So if you ever had that scenario happen before, it's because you're set to post only, which is good for trying to force saving fees, but it's bad when you're trying to actually take profit in your plans. And sometimes fees are worth it if you want to secure your exit plan. So GTC, what it will do is if it comes up and it doesn't fully close your limit order, it will execute the rest of it as a market order when it starts to deviate away from your price. So at least you'll secure your exit. If like fees aren't that big of a problem if you equate it into your risk to reward ratio. If you are focusing on 1 to 2s, you can always add. You can always equate how much of that R&R needs to cover your risk, your fees, right? So if you're going for like a 1 to 2.2 instead going forward, and you're only taking those kind of trades, you should cover your fees. Should be able to cover your fees. But you can always I can always answer that a little more thoroughly inside the server for you. Blowfin, okay, Blowfin's pretty clean when it comes to that. So it's when you're in an active position, it'll allow you to edit your exit as a limit order. Okay, can we check Karma? We can check Karma. Ethereum was the next request. I believe it was from Caliber. There it is. I look forward to the day that Kyle signals ETH. I'll signal whatever's safest most of the time, man. And when Bitcoin's making the move, I'll take the Ethereum setup if it's got the better R&R or the least amount of barriers. Well, Bitcoin's kind of the boss, so it's easier to focus on it. Ethereum, this is the Bitstamp chart. Let me zoom out a little bit. Ethereum, one thing that makes me feel a little bit optimistic about Ethereum is its positioning right now against its previous value area low. It's trying to get acceptance into it, but it keeps hitting its head off the previous point of control right here. And we got this like, yep, POC key level here. We came up and just got a little bit of front run to it, But yeah, we're hitting our head off the point of control. We got kind of like the starting of a potential parabolic curve. It's funny that we're talking about that. But we're just getting higher lows consistently. And we're trying to get acceptance into this value area. And we don't have true acceptance until we have like a proper break of structure, right? Like here, for example, is we got the high, but we never got the higher high, right? So if we got, after coming back down to this value area and testing most likely what was its point of control, I could always adjust that. Yeah, right off the point of control. What we need to see happen next is that higher high and break past this point of control so we can start targeting the value area high again up here at 2,655. I know it kind of sounds like a broken record when I keep saying that, but I just want to reinforce it. When we hit this measurable target, we can delete that. But yeah, we're kind of in this like area where we can prepare for the continuation or the reversal, since we are at like a macro local value area low. Like this is a 30 or 40-day value area low. But we're also positioned above a local value area high. So like shorting anything around here, you got to be super cautious of those confluences that could act as a form of support. The value area low, the previous value, or the active value area high, and the VWAP all right now are right here consolidated against each other. So coming back down here could induce a bounce. So just be mindful of that. So around these highs is where I would prepare for potential rejections. So we got rejection up here consistently. We got liquidity that's pulled up here. So up here, I'll prepare for rejection so we have some distance away from those confluences. And that way we can target here without needing to babysit it too much. So that's what I'll kind of wait for, man. Just wait for the better positioning, because right now we're kind of like in a no trade zone. I wouldn't be touching anything long or short. So I'll just box this zone a little bit higher at the point of control here. Visual order, send it back, and then we'll change this so it fits the bias. There we go. Just include all that liquidity there. So around here is where I would rather people prepare for shorts. And then, yeah, I guess this would be your barrier concerns along the way. But if you get acceptance into the value area, then you can start extending your target to the value area low while being mindful of the POC along the way. But like I said before, if we get the higher high and we start to find support off this point of control, we could see 2,600 happening likely very shortly afterwards. That's Ethereum. Hopes that helps. I wonder if the Wyoming stablecoin news will help keep SEI pumping. Yeah, maybe. It might have some relative strength because of that. Looking weak. We got that retest that we were talking about coming up. Hit this level. We didn't mitigate that 15-minute order block, though. I was thinking we might wick into it, but it's not a big deal. We could be coming up right now to SFP this level and bring us down here. Let's see what we have next. Ethereum, LDO, XRP. Where is the XRP request? Try to find it here. Alex, a long gold pocket already, TP1, stop loss entry. Nice. Long from the gold pocket. I think this was the next request, CRV. No, it was LDO. Okay, let's see what LDO looks like. Oh, what am I doing there? There we go. Let's go to Binance's chart. Have I not done TA on this? I thought I might have. No. Oh, maybe, I think I did. Maybe it was just not on this layout. Okay, so just seeing the behavior here. We got momentum lost. We got momentum maintained here. We have our key level here. We'll pull a fixed range from here to here. How old is this thing? It's not very old, eh? 2022. Okay. But it's been pretty bound, like it's just range bound. This is a good range bound trader's asset, that's for sure. So long as the market structure isn't a mess. So we broke the evolving momentum here. But we're struggling to get pat acceptance into this valley area. Yeah, so we had pull from here, here as well. So we're kind of in a make it or break it moment for this thing. LDO is got the final little demand zone over here that we haven't really fully mitigated. We went halfway through it. Got a decent bounce off this key area of interest right here. Now we're potentially double bottoming. We created a neckline from the supply concern over here. And after we mitigated that area, we had a pullback. We're below we have the 200-day and the 50-day EMA that had just recently had a death cross up here just after we left this valley area. But we need to get acceptance back above the 50-day and break this neckline to eventually get above the 200-day to help bring us back inside of this valley area. And once we get acceptance in this valley area again, we could start targeting its valley area high, which is pretty darn macro. Like we're looking at the daily right now. So I'll be marking these key levels and hope for that daily neckline break. One sec, sorry. And make sure you mark your valley area low with like an M. So you know it's a macro valley area and it has like more weighted strength than a regular valley area. Like this is over 1,000-day-old valley area low. Yeah, we want to have a break of this key level here, and then you'll have hopefully you can get a front run, obviously, to this. But this is the daily posture that we need to have broken to be in a position of strength. So if you get in anything that front runs this level to be broken, you would be in a position of strength once that breaks. And then you can start targeting potentially the valley area high, especially once you get that acceptance into the valley area with a break of structure. You got to watch out for the point of control along the way, but that's when I'll be targeting the valley area high once this breaks. So barrier, primary target. Let's see how we could potentially front run this. So we're currently positioned at the bottom of this valley area, right? This more local one. We've got this downtrending momentum here at the pace of the sellers inside of this valley area. We do have a 50-day EMA and a daily order block and the downtrending momentum here. So maybe this time around we'll be hitting our heads off of this and coming down. We have the internal uptrending momentum here. So kind of like how I drew it out with, I think it was dot. You get yourself a little triangle here and just wait for those opposing confluences kind of all meeting up around here for a potential break to the downside to pull back. And maybe you'll get a lower low and SFP this. That'll be awesome. That'll probably be the best scenario, is to jump in on like a daily SFP to front run this whole entire thing. Or you might get a higher high, right? So, or higher low, sorry, higher low. But yeah, right now we're in an area of confluence for potential shorts. We're testing into the valley area. We had this big supply concern here. We might come up a little bit, but yeah, hopefully we'll hold this momentum all the way up to this key area of interest. But locally right now, we're coming down alongside Bitcoin. So we might be able to prepare for a potential internal, like short-term scalp here, or off this uptrending point of interest, which will align with this demand zone here. Rather than pulling a fixed range, you can just grab a sorry, sec here. And template. There we go. So this is more of a eternal setup, but yeah. Coming down, posing change of character, and then target local highs along the way up. Do your R&R, risk management, based on your immediate barrier. If you don't have the proper risk to reward ratio to your immediate barrier, I wouldn't take the trade. It's better to prepare for the worst than the best. And manage your risk based on the worst case scenario. Litecoin, internal head and shoulders, possibly. Okay. Cookies in the house. I haven't looked at Litecoin in a while. LTC. 5 minute. June 6th. It's internal head and shoulders. It's based on these dojis probably, eh? Look at the lower time frames. I'm just gonna turn off my TR main here. Yeah, I'm not sure what you see here, man. Or unless you're talking, if it's not internal, maybe you mean inverse. Inverse head and shoulders. Let's zoom out. Oh, okay, I see. Inverse head and shoulders. Our last setup was the short. Was that June 6th? That was the 4th. Okay, so yeah, we're looking at that short last time. We can delete that. So if you're trying to trade off of this inverse head and shoulders posture, anticipating for it to run up to the measurable base target at 96.72, the fractalization of it, seeing it here as well, it's probably the best entry. It's around here. Unless you got it on the SFP, obviously that was the best entry. Let's zoom out a bit. Let's see like how it might be better to try to position ourselves based off some other data rather than the inverse head and shoulders. Delete some of this noise. We are breaking this downtrending momentum, retesting it now. We've got a lot of price action behavior reacting off this valley area, but not as like refined as I usually like seeing it. So like the confirmation of that inverse head and shoulders, the break of this downtrending momentum will come from a break of this high. So right here. So we need to have that broken to help validate the potential move to that $97 target and $96.72 target. But we have a lot of like concerns along the way up, man. First of all, the high itself that we need to have broken. We might be able to front run that with a previous valley area low change of character response around these areas. Can help prepare for this as your primary target. But if we break that, then you can extend your target first to here of this previous valley area high, where liquidity is resting, and we have previous resistance here, or support that acted as resistance from the trapped buyers escaping. But at least we're starting to see that shift in the seller's momentum, right? We're getting above this area and trying to use it as support. We just have to have that confirmation for that continuation up. And then once we have that break of structure, we can start defining this as the uptrending momentum, with this being our current momentum here. I'd probably go as far as like, adjusting it to maybe this. Your goal is to try to get as many touch points as possible. So if you don't get them, then like right now, this is pretty broad momentum. It's not very steep. So maybe after this break of structure, we get that follow-up break of structure to help define better momentum to monitor for the pace to the upside. It's the hourly. If we zoom in on the lower time frames, let's see, we got a proper healthy pullback here. So we got our internal change of character right here. But we're hitting our face right now off of this supply concern, right? We have the support, the impulse move, a little bit of base, proper pullback, another impulse move. So this is technically a supply concern, and we have the alignment of a previous point of control as well. So we got, we might be chugging our feet through this, but if we break past it, then we could start targeting this barrier right here. All right, there we go. But this is our first little mini boss before we can fight the main boss. I would prefer the positioning of the change of character to be obviously lower. If we got the change of character like around here, then we can monitor the point of control with some distance away from our entry. But having your entry right beside a point of control, it's always kind of like a little nerve-wracking, and don't usually take it unless we have the change of character key level in line with the point of control. It's a little, depending on the positioning of the point of control to its valley area. If it's on the lower side of the valley area, then I will take the break of the point of control with the confluence of the change of character. Right? So that then I'll jump in on something like that. But this one I personally stay away from. Okay, that's Litecoin. I'll save the chart in case you need to access it. Hey Kyle, just jumped in. Did you guys catch the trade this morning? I didn't catch the short. I was talking about the short for over a week, and I missed out on it because it was around midnight. Yeah, I wanted to take the short for a while, but I think I was just getting into bed, or I was already asleep by then. Congrats to anyone who took that. I could see clearly that there was definitely a sell wall there too. I mean, that really clean horizontal resistance engulfing candle response. So there's likely a giant limit sell wall as well. Let's see. Got a request to look at XRP. I got the XRP open already. We were talking about longs last time. It looks like it's based off of what time frame? 15-minute posture. So we need to have this level break to enter a trade. Your stop loss guard here. They would have went against you. Your heart would have stopped a little bit, but then it started, that strong low was still guarded. That's why you put your stop losses in invalidation points, guys, so you don't get stopped out and then it go your direction. It's the worst. Where our main concern was this area along the way, but since it was at a macro valley area low when all this started occurring, you start to target your valley area high. And on XRP, that's pretty far away. Like we got a percentage-based move from where we currently are to like another 15%. Congrats to anyone who took that trade. But basically, yeah, now our main concern, let's zoom in a little bit because I think there's a supply concern over here. A little bit. Yeah, it's not too bad. We're already fully mitigated with this candle, so I'm not going to mark it anymore. But I'll be watching for potential opposing changes of character around here on like the 15-minute that could bring us right back down to this area of interest. But overall, yeah, we could potentially get to at least these highs. If you get past these highs, then the point control is your main concern, and then you can start targeting the valley area high for XRP. So XRP is looking bullish. It's a really good position of strength. And it's got relative strength against Bitcoin because Bitcoin right now is, dropping as XRP is going up. USD dominance is going up. So most of the funds are flowing out of alts into USDT and not so much into Bitcoin. XRP's got some relative strength. And nothing I can give you advice on right now other than the fact that we did just come through this previous supply concern here after grabbing liquidity from this high. So having an opposing change of character could warn you that we're coming back down to this valley area again. So I'd mark your valley area high of that range bound price action and just prepare for a potential retest to that level. And we might get a continuation back up from there and maintain the pace of this momentum. Yeah. Looking good. Yeah, congrats to anyone who took that. I didn't take that one. I should have. It's more of a macro trade. I'll save the layout. Polygon coming up, maybe. Let's see. Okay, XRP, Lido, CRV, then Karma. CRV. How are you doing? So curve Dow. Some relative strength there too. Cool. We might be getting a death cross soon. I'm just zooming out in the macro because I don't think I have this chart as well. Yeah, I don't. We got uptrending momentum that's starting to fail. We got this previous area of interest here that we left. Just recently hit our heads off of its valley area high. previous value area high. Strong area of interest here. Previous point control. And our value area low. How old is that? We've got 722 days in that value area. So it's a strong value area. We've got downtrending momentum as well. So if we lose the uptrending momentum, we still have this that we can track for the pace of the sellers. We had a tweezer reaction out. We cut through. I always cut through tweezer reactions with my trend lines unless it was the start of the momentum. And usually it's not. Usually up here, you'll see a huge spike down and then a weird price action, bring it down from there. The more you trade, the more you'll know what I'm talking about. Yeah, I just hit my mic, sorry. Okay, so we're about to cross on the daily. We get a death cross. Historically, with most assets, it's doom and gloom, spells doom and gloom. But also it could happen when you're range bound, where you have these like consistently getting a bunch of death cross, golden cross, death cross, golden cross, when you're stuck in a range for a while. So I would position myself to prepare for potential longs off of maybe getting a change of character off this point of control, alongside with the confluence of this demand zone. This demand zone here with the daily order block. If we break through that, then even better. You'll have much better positioning to prepare for longs around here at 40 cents. But overall, we're still getting our heads hit off of this downtrending momentum, which could help you with your shorts if you are, especially a Fibonacci trader, looking for key levels of interest where you could pull back from. Like if you get an internal change of character, for example, from this high to this low, it could help you generate key areas of interest where you hit your heads off it and come down. High to lows in your down trends. For example, here internally, this high to the low. You get an opposing change of character. You can use the Fibonacci tool to help generate a potential area of interest where exhaustion might occur. Right now, we're stuck range bound. And the confluences that are stacking now are the local value area high, 618, 786 key level of interest. If we had like an order block in here, it would be even better. We have uptrending momentum. So if momentum fails around this key area of interest, and you get your change of character, you can start targeting the value area low while being mindful of the value area high along the way and the point of control. We got a decent regression trend here. So there could be based on the order flow, there could be a lot of stops and liquidation levels throughout this little path right here. Think of this as a line of liquidity, and most of it ends right below it. I hope that helps. That's what I'll be preparing for. But overall macro, I'm expecting this thing to keep maintaining its downtrend until about either this point of control with the daily order block confluence or this value area low. Okay. Kyle, what do you think about shorting that 5-minute double top on Bitcoin after the neckline retest? Valid. When you have equal highs or like this here, if you're talking about this, yeah, this one's fine. It has at least, it would have been a lot better for me. I feel more comfortable if we got a little bit of a higher high first and then we broke that level, because I like to have changes of character alongside of my setups. You said the 5-minute posture. So this would be your key level that you'd watch, right? We got a pullback, more of a bounce after the inducement of grabbing that liquidity, which actually induced more liquidity below. And then we start taking it, retested from here. So this is the proper retest. After we got that lower low, you could have taken the short. You'd probably feel better having your stop loss here rather than here, just because you have the VWAP on your side, right? Unless you get a little bit more breathing room. And then, yeah, I would have taken the short for sure, man. Especially with all the confluences that we were talking about before in this area. We had the supply concern from back here, right? We know there's a bunch of stacked liquidity in that area, and we had the downtrending point of interest here, and we could tell by like the behavior of this high that there was a sell wall here, and most likely because of the downtrending point of interest. Sell walls trail these trend lines, and if there isn't one, if there is no sell wall, then you kind of like treat it like the trend line's not even there, because you know that it's not being respected by like market makers or other traders. Yeah, good job if you caught that. I didn't catch it. It was too late. Unless you're talking about this double top, then I would say no. I would not trade that retest. We got a bit of a pullback here, but even if we got the lower low, I'm not trading that because our barriers are right in center, like right in our face, and it's off of like a point of control like that. It's a little bit awkward. If the POC was higher and we're bouncing off of it like here, I'd feel a lot better about taking that short, but our positioning is way too close to our value area low. Karma, SUI, and SEI. What's up, Just a Killer Whale? How you doing, man? Thank you, Kyle, for everything. God bless. Thanks, man. Is the $1 million challenge going to be on YouTube, Fanova, InvestiShare? Yeah, so most likely the majority of our trades are going to be inside the community, but just because the schedule of the YouTube lives there might not be an opportunity, but we can at least talk about what we're preparing for. And if we do catch one during the live, then awesome. But yeah, it's gonna be a blend between the three of those. Yeah. Whatever's on InvestiShare will be inside Fanova and vice versa, but on YouTube, not everything will be on YouTube. But we'll go through every single trade that we do on YouTube. Karma request. So Karma, right now we're working on we're just finishing up a CMS system for Karma. Let's pull up Deck Screener. Basically revamping the entire website to communicate our tokenomics a lot better. But right now we got some buyers because we're at an area of interest. We haven't came down to this area of interest yet. We use it as a form of support. This is the last cycle's all-time high right here. And we're just dipping down, bouncing off of it now. But we're basically at a lot of people's averages are within this valley area here, within this range here. We came up, hit this little supply concern, lost the momentum, and now we're trying to generate potential support here. We did just add more utility to, not to Karma itself, but more reasoning for Karma to pump. With the clairvoyant NFT now being connected to Karma, it's going to induce buy orders and send those buy orders to people who are holding the NFT, and not all of them will sell. So we'll have like a permanent pump effect, especially since it's going to burn some of those tokens from the buy orders, right? So Karma's going to do pretty well very shortly. My goal is to get this thing to $1 first, but the supply is so low, it'd be pretty easy to get to something much higher than that. Going back to, what was the other request? SEI? Any opinion on Circle stock? That's a good question. I got some other ideas in mind for investing, but it syncs really well alongside Bitcoin's chart. So if you find a reason to enter Bitcoin, you could most likely find another reason to enter something Circle. And if you are trading within your TFSA or Roth IRA, you can extend your limit for your Roth IRA. Just don't trade too much inside your TFSA if you're in Canada, because if you do too many trades, you can get in trouble for it. But it's a good way to extend your limit because all those gains are tax free. So if you want to trade like something, and if you're really good at trading Bitcoin, trading a Bitcoin ETF or assets like MicroStrategy or Circle are really good for like knowing how to call the tops and bottoms for that particular asset. Usually syncs alongside Bitcoin's price action. SUI, SUI. We got a SUI chart. What were we looking at last time? Probably this, yeah, crazy momentum we got here. Too much noise. Let's clear up some of this noise. This value area low, where's it coming from? Is it important? Not really. We can delete that. That came and went. Broke momentum. Double bottom neckline. Crazy long. We're kind of hoping that history repeats itself with SUI for sure. We've got this massive move down, right? And it was a slow crawl down. So we stacked a bunch of liquidity up above us, kept taking from below us. And the same thing is happening right now. Keep taking liquidity from below us, keep stacking more above us to help induce a potential move back up. We can delete this pole. We don't need this anymore. This helped us with our targeting for up here. We had the supply concern along with the confluence of the 618 and 786 level. But now we can do that pull from this high to this low for confluences for potential rejections along the way up. So this is more of the daily posture. Zooming in on lower time frames. This is a huge key level that we need to break past, like 293. It's pretty big for SUI. Sorry, I got hiccups. This value area data is helpful. You could pull a horizontal array from here. Value area high. Oops, my bad. And previous point control here. Okay, so if we look at the active price action, just update that. If we broke downtrending momentum after testing that key area of interest and this supply concern, we've got some liquidity up here from this wick, right? So lots of confluence to hit our head off this and fall. Our liquidity is now resting above the key area. So if we come up here the next time around, we might break through it and use it as support to start a run up. Right now, we broke internal downtrending momentum. We've got the double bottom structure. We've got the change of character reaction. And now we are hitting our head off the local value area high, bouncing off of the previous point of control. So we need to get back above this VWAP and this high, so we have that breakage structure for a continuation to then start targeting these highs again along the way. We got a little bit of a concern here. It's not too strong, but I would mark this just in case you get a imposing change of character reaction off of this. And once we get that, if we get that breakage structure, that higher high, you can start monitoring the uptrending momentum from here. Until this gets a higher high, you cannot trust this momentum. And then you can start using the order books to see if this is going to be honored along the way. If you see any buyers along this trend line, think of it as guardians for your capital to help drive the price up. Once those buyers start to disappear, you'll notice the weakness and you'll start getting the opposing change of character. If you don't want to take the long, which I fully understand, longing into a value area high, I don't normally recommend it unless we have crazy confluences, like a squeeze usually. If I see a squeeze, then I'll usually give you a value area high long signal. But I would be more mentally preparing for a short than entering any new longs unless you're in an existing long from either of these SFPs or from this change of character. Hope that helps you out with SUI, but it's just basically a waiting game. We need to get out of this value area. If we get a rejection off of this area, even if we get a higher high, we start getting acceptance back into the value area, you got to watch this as a key level because it could induce a move back down to the value area low. But yeah, that's SUI. Let's see, we got anyone watching? Is anyone watching XRP? Is it going up still? Let's see. We did just look at it. It was doing a decent pump up. We watched it at a key area of interest. We were worried about rejection. Oh, look at that. So we closed. Okay. The active candle at the time looked pretty bearish, but it didn't close too bad here. So now we're coming up to, this is our main area of concern up here. So we got some relative strength going on XRP right now. Pretty cool. So this is your primary area of concern right here. Yep. Nice. Yeah, XRP's macro range is just incredible for people who are patient with their daily range trading. Because this is a pretty decent value area gap, 25% from the value area low to the value area high. So once you get those warning signs in the lower time frames at these levels, they give you the best trades. We haven't really got anything like that on Bitcoin since like February to November. I don't know if you guys remember. If you don't remember, then you're new to trading, but this was a really nice range here. The trade. XRP is kind of giving us that same kind of behavior, but this is like, this was the awesome. I made a lot of money on this area here. If Bitcoin did nothing but range, I'd be happy too. Like you can make a lot of money just trading ranges. You don't have to hold something until it goes 2 million or something, right? Okay, SEI, other request. We don't have a layout for that, so we'll pull up SEI in a separate chart. Go on Binance. We did a little scribble, I guess. Yeah, it looks like the last time we were talking about it was the fact that it was retesting this value area, this 200 EMA, right? And if we got the opposing change of character, preferably on top of the 200 or alongside it, because you wouldn't really want to jump in the neckline break here. You want to make sure that we get above the 200, right? So that kind of eats your R&R a little bit until eventually you got that ascending head and shoulders change of character reaction and started. It would probably scare you out at that point. Let's pull a fixed range from here to here. Oh, we can pull it a little bit further. My bad, didn't visualize that properly. So here to here. We've got our value area low. We've got our value area high. And we got our previous point control here. Okay. Oh, my bad. I didn't mean to do that. We got this downtrending momentum to monitor. Hey, there's a example right here. I was just talking about how like tweezers, I cut through them, but when they just occur to the start of the trend, they usually aren't included in the poll because of the lack of price acceptance. Usually induces a high volume reaction, and you can't really use it part of your trend line polls most of the time. So we got this downtrending momentum here. We're grabbing this previous liquidity here that might induce the break of momentum. But yeah, ultimately, I prefer if you're going to be jumping on any longs to get as close as you can to this valley area low around 28.24. And if you get the opposing change of character, your probability will be really high for a decent long to the valley area high. And we tried using this as support. We did well for a little bit, but when we tried doing our run up, we kind of failed after we just did the liquidity grab. Oh, I just got scared from my alert. So let's see if we get that SFP on Polygon. But yeah, so yeah, basically what I mean is like if we might get like a pullback here and hit our head off the POC, but yeah, if you're looking for longs on SEI, I'll be waiting around here to scalp internally from basically the value area low to the value area high. Nothing wild or crazy. If we fail off that value area high, this could be a potential good front run because we could be fractalizing to build a head and shoulders, and not just any head and shoulders. We've got the Batman head and shoulders that could be formed. So just watch out because that can bring us right back down to the 200-day EMA for SEI. So around here. Go to Polygon. So what we want to see for an SFP, for those of you who don't know what an SFP is, it stands for swing failure pattern. And what we want the price action to do is come up, grab this liquidity here, but close right back inside the range in the same candle that grabs the liquidity. So let's say we have 10 minutes left on this candle. Let's say this 10-minute candle comes up, grabs that liquidity. We want that same 10-minute candle or 15-minute candle to come down and close back inside the range, or at least close. If we have it a separate candle, let's say it closes up here, we can SFP and close back inside that high that the last one created, and then you can target these lows. And since that SFP induces a break of structure, it generates a new strong low, and then we can end up getting a change of character reaction. SFPs attack your strong lows, strong highs to help potentially induce a change of character. And your stop loss will be above the wick. You can start in lower time frames and work your way down. So like 3 minutes, all right. 5 minutes, yeah, it's not really. Like you might get a 5-minute SFP, but I did 15 minutes a little more. You kind of want to work your way down, like start from the low time frames and work your way up when you're doing SFPs, because you might be able to front run your 15-minute SFP with like a 5-minute, for example. And then you start like going up in the higher and higher time frames to watch and see how the 15-minute candle, like the 5-minute candle closes or the 15-minute candle closes, to see if it also got a higher time frame SFP to help induce more confidence in your setup. 8 minutes on this. Cardano was a request. So while we're here, let me just put a alarm to this. It'll probably make me scare the crap out of me too. But let's go look at Cardano. We had a request on that too. Okay, Cardano might be giving us an SFP too. A little bit more legacy, more of a legacy SFP. It's more aged. We had a recent one here. So this is our range, right? Our range low. Liquidity. This was the one that did decently well. Let me target these highs and be mindful of this high too. So we crossed we got our body level here. Right? So we want to have close below here and a grab of this liquidity here. So if we come up and we grab that liquidity, close back inside this local area, we can get a potential SFP from that. Normally we build a little bit more structure before grabbing stuff like that though. So we might be range bound before it's grabbed. And whatever low we have generated after that, we got to watch that low as our primary barrier concern for our SFP. That might not be what you're after when you're asking me to look at Cardano though. We keep just not getting our key levels break. So we have this downtrend momentum that's been holding it down since May 23rd. Building an ascending double bottom again, like we did last time. It looks like we're fractalizing the exact same way. It's kind of an eerie, right? Supply concern, pull back, ascending double bottom, right? Built the neckline at this supply concern high and came down, ascending regression trend, double bottom break. Literally identical. Supply concern, ascending double bottom, induced neckline, regression trend, induced neckline here. We could be coming up for that break to the upside again. So if that SFP invalidates, we'll have a key level here the same way we did here to help predict this move up. Pretty damn eerie. That's so identical, it's insane. It's fractalization. So we need to break this. We need to see this act as support and break this downtrend momentum. You watch the supply concerns along the way up. These previous highs, any base levels of range bound supply concerns. But locally right now, internally, from what we're looking at, we could SFP here. But yeah, we need to have that. I'm expecting for us to go range bound for a little bit first before we grab that. We're not getting any alarms off of, there we go. Starting to come up now. Let's see if we get that SFP. Or if we're just going to grab liquidity, use it buy side liquidity and pump right up. Luckily for SFPs, they get validated quick, so you're not waiting too long. Unless it's like a daily SFP, then you might be waiting a while. But you're waiting for your daily candle to close. So you set a timer for near the end of the day for how the candle closes. What are you guys doing? Any questions you guys might have about anything trading wise or I do gotta head out soon. Three minutes left in this candle. You can do it. Gotta go. All right, see you, man. Have a nice day. Our life is buffering right now, hoping for an SFP here. We got 2 minutes left. Starting to crawl our way up. Let's look at the 3 minute. Really steep momentum on the 3 minute. Steep momentum on the 5 too. Okay, so we're grabbing it now. Alarm. I was expecting alarm and everything. It still scared me. All right, we're now sweeping the liquidity. So now we need to have, it's not going to be likely unless it's really aggressive, but we need to have this candle close back below here on the 15. We only have a minute and 20 seconds, so we'll need an aggressive pullback to validate this, unfortunately. What's Bitcoin doing against this? Okay, we're getting back above the point of control. $50 seconds. I've seen it do these little flash crashes before, so I'm not too discouraged just yet. If it doesn't happen, it doesn't happen. It just means we'll just wait for the next setup kind of thing. Not looking good though. It's not. For an SFP at least. If you're in any longs, congratulations. You might be staying in it. With the Chainlink MasterCard deal, can we look at Link, please? Yeah, I can do that. I have the relative strength for Chainlink. Okay, we just had our invalidation for our short. So unfortunately, we won't get the SFP. But our key level did rotate. So this level here did just rotate to here. So now, if this level breaks, we'll get the change of character to help us induce a strong pullback from this parabolic curve break. Right? So that's one positive. You get one trade plan gets invalidated, a new one gets created. Okay, so Chainlink, let's pull up Chainlink's chart. I'll save this layout. See how Chainlink is doing. Definitely got some adoption behavior. We're building like this inverse head and shoulders pattern. Some signs of accumulation. We fractalized here. We got this downtrending momentum that's been keeping it down, I think, for $30. Yeah. This is where I sold my seed investment for Chainlink when we lost this top. So now all I've got in it is just basically profits, house money. So the optimistic structure that I'm seeing here I know there's a lot of lines. I used to trade this one quite a bit. So we have got ascending, uptrending points of interest here. We are building a double bottom posture. We're fractalizing inverse head and shoulders all over the place off of this double bottom posture. So this the one that we're building right now could induce the move up to break this neckline to then give us a measurable target of this point of control at $27. Let's pull this here to here. But yeah, 29.44. It's a measurable target. I'm going to delete some of this noise. Like a lot of it's not necessary because more of a local price action stuff that we've had before in the past. Quite a bit of noise. This one we can keep. A little bear flag drawing, we can get rid of that. Okay. Now let's look more at the local price actions. We can delete this noise too. Our fixed range volume profile poll can include all this data. Delete that. Macro value area lows in line with this previous high concern here. We mitigated the order block from this wick up here. We had a 4-hour order block from these two candles. Here and here. We tapped into it. So there could be residual sell orders from here to here. They could be less in place. Just be aware of that. Like around 1389, there could be sellers waiting. I would mark this wick just in case we SFP off it as well. Zoom in for the 15-minute. We have broken our downtrending momentum, so there's no point in drawing it, but we'll draw this uptrending momentum here. We're at an area where you normally prepare for shorts in this local range. We could include this data here. Sorry. There we go. So you want to mark your value area high. Oops, my bad. Value area high. Point of control. So what you want to kind of look for, you kind of want to hope for the move to go all the way up to these highs, right? So you can have the better R&R scenario for any potential shorts you want to prepare for. So around here, if we get the SFP, prepare for a short down to the value area high. If we get it between here and here, you can still get the short. Just be mindful of the value area high potentially acting as a barrier for your shorts. It could induce a bounce and actually bring us out to eventually leave this acceptance back above that macro value area low. But until we get above this area, I would be preparing for shorts around here. If we get above this, then we'll have to wait for more structure. There's lots of confluence here for a rejection. We have the supply concern here. We have the macro value area low here. So we got lots of bearish confluence off this level here. But overall, we're hoping for a squeeze on Chainlink to break us out of this macro downtrending momentum. And I'll start driving the price up from there. And at that point, I'll be targeting $30 again. And I kind of want to see total 3 as well, see how it's behaving. But yeah, waiting for the posing change of character, prepare for a short will come down to targeting the value area low, but watching the value area high as a barrier and the point of control. If you get opposing reactions to this, opposing change of character, listen to the market and escape because it could be preparing for a big run up. Especially if there's like news out for Chainlink. I know it's positioned to be bearish, but if there's bullish news coming out, it might give it relative strength to break these through these highs that we're worried about. Bitcoin. Let's pull up total 3 for a second. Okay, we're bouncing off momentum. So yeah, we might see some relative strength in alts soon. It's looking a lot like Chainlink actually, in the sense where it's like we got this downtrending momentum, inverse head and shoulders posture against it. So we might start seeing some relative strength coming in soon on alts. Let's see what the other dominance looks like. Our key level is way up here. We really wanted to have that broken, but we went down lower. It's still the same. Nothing's changed. We now have a double bottom posture, but it won't give us the change of character. We didn't get the lower low. Yeah. Not that this isn't an important level, but sometimes I just prefer to have the confluence of the change of character as well. Okay. All right, let's go over here. Can you check the 30-minute on Polygon? Yeah. Yeah, we might, like I said before, we might not get the 15-minute SFP. That's when what you want to do. You want to rotate to higher and higher time frames to try to get you that SFP. If you're an SFP trader. 30-minute though, man, like it might not give it to us. So what you're hoping for is the candle to close below here, right? Below this area. Got 5 minutes on that, man. Definitely possible. We could get the close down below here. Your stop loss would be above the wick though, right? Unless you see lower time frame structure to define a good stop loss. But look at this. It's just parabolically just going up. Yeah, it's not out of the cards, man. You can definitely get the SFP on the 30-minute. Just know that it's not going to give you the proper R&R for a normal SFP target. So if you take that short and use this as your stop loss guard, you're going to have less than a 1-to-1 risk to reward ratio to your primary barrier concern. But if we break that and we get the change of character, it'll be a multi-time frame change of character. It'll be the 15-minute and the 30-minute. So you might have a lot of trade participants react off that change of character if it happens. And the more time frames that could induce a change of character simultaneously, the more trade participants you get, the more likely it's going to blast towards a target. I've done a couple signals like that where like I immediately get a message because people are like, how the fuck did you know it's going to be like that big of a move right after entering? It's usually because there's multi-time frame confluences. Sorry for the F-bomb for anyone who's got kids in the background. But it's not looking good on the 30-minute either, man. It's going to need to go straight down for that. If alts may be rallying soon, will you post this in Discord when you sell to accumulate more? Yeah. So I've got 10 assets lined up to announce in the community that I'm going to be buying. Each one of them is going to have different unique key levels, but I'm focusing on the narrative or upcoming narratives to prepare for which assets to hold during the altcoin season, because not all alts are going to do really well, right? Some of them might, because it's so oversaturated this cycle compared to last cycle. Last cycle is pretty damn easy to like pick which assets will do well this cycle, you have like 100,000 tokens being created every 5 seconds. So it's tough. But I've done some research on a bunch that I really want to invest in, and I'm limiting myself to 10 assets. And I'll tell you guys like what I'll be doing. Late live. Yeah, my lives are going to be later on Mondays now. Sorry. We have a call on Mondays for the community with one of our coaches, Brian. And I don't want to keep accidentally stepping on his foot. There's people in the community that are trying to watch my live and watch him simultaneously during my morning stuff. And yeah, so on Mondays, I'll be doing it at 2 o'clock going forward. I'll post a picture for you guys of my schedule that I plan on doing for YouTube going forward, so you can follow along me if you'd like. But we're doing that $1,000 to $1 million challenge, and it's all going to be documented on YouTube. But not every trade will be done on YouTube. That way, you guys can learn how to. Mainly, the thing that you're going to be focusing on the most is your risk management during that challenge, guys. So we're just be consistently trying to risk 1%. Oh, lower time frame gives better R&R. Yeah, you're right. Lower time frame gives you better R&R. Majority of the time. Your goal is to front run higher time frame activity with lower time frames. 3 minutes good for front running the 5. 5 minutes good for front running the 5. 15 minutes good for front running the hourly. But you always got to be aware of your higher time frame structure. Like what direction are they going in terms of the trend, or what key level could force you out of your trade. Like if it's a strong high, for example, it could force you out of trade. Are we going to be million? So I'm going to be documenting my process. So I'll be telling you what I'm entering with, right? I'll be trading with $1,000. I'll be risking to lose $10 to try to gain $20 or more, preferably more, in the beginning stages. And then once we get to $10,000, we're going to be changing things up a little bit. We're going to be dedicating some of the funds to liquidity pools so we can earn passive income while we're trying to gain active income. But we're going to be managing our risk with our trades as if we have the full $10,000 in our account. So we're risking to lose $100 to try to gain $200 or more, right? And we're going to scale our way up until 100K. And then we really got to change some things up, because the downside with being a signal provider, someone who tells people to jump into trades or jump out of trades alongside them, is you are inducing a massive amount of liquidity simultaneously. So if you have 100 plus people following you, jumping into your trades along with you, we're all going to have the same stop loss. We're all going to have the same kind of leverage, hopefully. And all that could attract attention. So once we get to around 100K, we really got to separate some of our funds a bit, so we don't all jump in and immediately put in $500 million worth of liquidity in one spot. All right. So we don't want to be a market maker magnet, right? We want to use the market maker as a tool to make money. We don't want to make them money. Right. So once we get to a certain point, we got to start diversifying our stuff into spot holds, into liquidity pools for passive income. And then we'll have a certain amount of funds set aside for our actual active trade setups. So in stages, we'll be changing things. And there's 3 separate stages. Once we get to from 1,000 to 10K, it's one stage. We'll be changing stuff up. And then when we get to 10K to 100,000, that's when we're really going to be blending a lot of things. And then once we get to 1 million, it's going to take a couple of years, guys. It's not going to be something that will be done quick. So don't assume that this is a get rich quick thing. Trading takes, even if I say I'm entering here and exiting there, it doesn't mean you're going to still you're going to do it properly. So we'll have a course. We have a course, of course, that everyone will take to make sure they know how to do proper risk management, and to make sure that if your stop loss is hit, it is that $10 budget and not your entire account, right? Because if you don't do proper risk management, then there's no point in trying the challenge. Sometimes you feel like market makers have access to your screen and see when you're entered. Well, they have access. They know how you're taught, and they're the ones that are inducing the price action behavior, right? So if they're trying to induce liquidity to appear at a certain area, let's say like here, for example, they're going to be pumping the market when it's appropriate to induce retail to do certain actions to induce liquidity. So it's very possible that it might feel like that, man, when you jump in and you immediately get stopped out. I've been there before. So yeah, man, you got to be careful with how you manage. You always want to put your stop losses in invalidation points, areas where the market makers don't want the price action to go, right? Areas where if it goes to that location, not only will you lose, but the market maker will also lose too. So you only putting your stop loss in spots where the market maker will lose their wallets too. And you got to think of market makers as potential guardians to your capital. They're not trying to, obviously they're trying to go after people's money with liquidity for exit plans. So you got to make sure you don't become a part of that liquidity. When you open a trade, the market makers as liquidity providers open a trade off it to yours. Yeah, it's hard to. So basically, changes the characters and breaks the structures and induces order flow in the market. So if you end up seeing, say, for example, this break of structure occur, you can assume that there's liquidity down here. You can validate it by looking at the liquidity heat maps. Every break of structure could induce more liquidity, because every break of structure can induce traders to take action on a setup. More of the heavier, smarter trades happen at bottoms of the extreme lows and the extreme highs of a range. So most of the liquidity tends to rest at these low wicks, for example. And your goal is to try to enter the market when that liquidity is being taken, right? When that liquidity is being taken, like an SFP, for example. And if you don't get it in when the liquidity is being taken, you want to be getting in during the setup that helps induce more liquidity to be below us, that the market makers usually induce through changes of character. Like this break, for example, will most likely be done by institutional involvement, where the market makers putting their stop losses. So that's where you got to kind of like think to yourself, where the market makers trying to exit, where are they trying to enter? And then you trade alongside them and use them as a tool. I'm late. I love the sound of this. When are you starting this? And is it all on YouTube? It's not all gonna be YouTube, but it's all gonna be documented on it, because I can't jump on a live every single time we do a trade. But every trade that we do will be documented on YouTube. Market makers hedge themselves on spot. Yeah. They'll create a buy wall after they enter the trade on spot environment. Spot environment has a larger impact over the price action than futures does. But I gotta go, guys. So yeah, it'll be on the 7th. We're starting that 1K to a million. I know a hell of a lot more than I did when I grew my account from like 26K to 40 Bitcoin. So the process is going to be a lot less trades, a heck of a lot less trades. So my goal is to try to get to 1 million in 430 to 500 trades. That's my objective. Just try to get there within that period. And just so you know, like I normally get this is probably going to take about 2 years with my trading strategy. I doubt I'll be changing my strategy throughout the journey. I highly, highly doubt it. I might learn things that might improve my strategy a bit. I'm always trying to learn. With trading, there's infinite things to learn. It's just like music. You can pick up a guitar, right? But there's going to be like an infinite amount of songs out there for you to learn. So it's the same kind of thing with trading. It's an instrument, and there's a finite amount of songs for you to be able to figure out how to play. And each song's just a different strategy. But yeah, I'll be focusing on value area trading, range bound trading. The market ranges 80% of the time, so we'll have a lot of, I think, a decent amount of opportunities. We're not going to be doing very many trend bound trades. If they happen and they're really transparent, then obviously we'll take them. But most of the trade setups are going to be focused on range bound behavior. My win rate is pretty high when focusing on ranges, so we can get to our target faster. We're going to focus on value area trading. All right, guys, you have yourself an amazing day. Reach out to me if you have any questions about the challenge. I'm glad to be. Yeah, I'll help you out with any questions you have with that. And like I said, it'll start on Monday the 7th, so you can get yourself ready, prepared for it. You do not need to start with $1,000 account if you are going to be following along. You can start with a $100 account. You can start with $10 account. It doesn't really matter so long as you have enough volume to jump in on the trade. And none of it's going to be obviously financial advice. I'm just going to be documenting my process to get to $1 million again. It's all going to be done the safest possible way possible. We're just be focusing on risking lose 1% to gain 2% or more. All right, guys, you have a great day. Thanks for watching. Like and subscribe if you can. It helps a lot with the channel. We've been growing at a decent pace. We got to a goal of like 6,600. Our next goal is 6,700, which should only be about 90 more subscribers from here. We'll be swing trading trades. We'll be doing a lot more swing trading when we get our account to 10K. At first, we're just going to be focusing on growing through range bound trading. I'm still going to do my regular call outs, except I'm going to be communicating them a little bit better. So I'm going to be including how I manage my risk in my regular signals now. I'm going to be posting at the beginning of the day, before we even give a signal, like I usually do. So with our regular signals, like, you know how they are planned out, right? Entry condition, stop loss, target. Simple kind of layout, so everyone can kind of follow along. But now there'll also be a little section where I'll say like how I'm managing my risk, how much I'm planning on risking to lose, what my stop loss budget is for that trade. Since it's going to evolve, since we're going to be doing compound risk management of risking to lose 1%, instead of doing fixed risk management like we're used to. That way we can grow faster and just, kind of sprint instead of walk. That makes sense. And happy Canada. Is it Canada Day? Canada Day's tomorrow, isn't it? Oh yeah, thanks, man. Appreciate it. I guess I'll be doing that tomorrow. All right, see you guys. You have a great day.